Yeah, that's our disclaimer. Well, I'm going to show you lots of companies. We don't recommend any. We're not allowed to. But basically, I just wanted to show you quickly through some slides. First of all, where gold sits, its dominant position on the ASX market. It's actually 30% of the ASX resource market. In the daily, every day, we have our left-hand column shows all the gold companies that have made an announcement. So they're the ones that made an announcement on that day, which is the 16th of October. Where's the location of flagship projects of ASX companies? Well, it's about 70% are in Australia and about 30% of them are overseas, and it's dominated by Western Australia, where we have about 69% of listed companies. It's been a good year for gold. The price has risen 31% over the 12 months, and it's outperformed if we look at the average share price of all ASX companies, gold has definitely outperformed all the others. You can see by the yellow graph there that if you're on gold as compared to all of the commodities, your average share price of your company would have gone up quite considerably more. That just shows you how it compares with other sectors of the ASX market. These are the companies that have risen the most over the year. They've all gone up over 50%, sorry, over 100% over the last 12 months. There's 14 explorers, 8 producers, 1 development ready, and 1 is due for takeover. So about 11% of the gold market has gone up over 100%. We divide our companies up on Austex does this. We divide them between large, plus $50 million, because that's about where an institution comes in. Medium size, because their potential to move up into something exciting, and then the small companies, which are under 10. So the small companies make up about 38% of the market, and that's where you can get the biggest boot, but it's also the highest risk. If we look at the major ones, if we look at the average share price across those 3 groups, we see that there's quite a gap between the blue graph, which is the plus $50 million market cap companies, how their share price has moved over the last year, compared with the medium and small ones, which are the black and red line that have hardly moved down the bottom. So you can see the big upside, and most of you will be aware of it anyway, of what happens when a small company can move up to be a big company. If we go into the big companies and look at the plus 50 million, and we divide them into 3 ranges, the plus 500, the 100 to 500 market cap, and the 50 to 100, we've seen that the biggest share market rise has been between the 50 and 100. They're the emerging companies over the last year. They've gone up 121%. That black line's a bit flat, isn't it, between 50 and 100 and 500? Hadn't had quite as good a year as the other groups. Let's look why in a minute. First of all, let's look at who are the predators out there. These are the big guys hunting for ounces all the time. Most of them are active in Australia. You'll be familiar with them. Most of them in WA. Gold Road has just come into that group. It's probably not going to be among the predators. It's probably likely to remain an explorer. A couple in West Africa, and of course, we've got ALAS up in Turkey. But those companies in that group, they're all hunting for ounces. If we look at the next range down, we see that that graph, if we plotted a different scale between 100 and $500 million companies, that actually moved up a month later than the bigger companies. So it took a while, but they still did have that movement there. But this is why it was held down. In that group, we have those red companies, and they haven't had such a good year. Their productions are in a little bit of trouble. You know, you can have a look at them yourself, but I'm not sure that the predators are really going to look at buying into those. But the companies in the top list, they're all companies that could well become M&A targets by the bigger companies at any time. I've got in there Tribune and Rand that are involved in that project with Northern Star just near Kalgoorlie, East Kidana, and probably not in that space, and Beacon's a bit small, but they just fit in there. Red 5 would probably have to be laid down as there as being one of the companies that must be in the frame of the bigger companies. Actually, I just want to go back to, in that lower group, I'm not sure if I can, but anyway, in that lower group was Oceana Gold. They've had some great results out of New Zealand, and they're not sort of share price-wise haven't been moving so well, so they could also become under the target. And of course, a lot of the big companies have headed off to North America to buy assets as well, which are not necessarily on the ASX. But let's go down now to the gold explorers that might be in those big companies' frame. Spectrum, they've probably performed the best. I'm not sure what will happen today. They've come out with a resource which isn't as flash as maybe the market would like, so we'll just see what happens to them today. Magnetic also too needs to get on with it and get a resource out. Capricorn's been sitting there a little bit idle, waiting to go into development. Hopefully they'll go soon. Echo's gone, Northern Star's taking it over. Bellevue is sitting there as a delightful company for someone to get hold of. Catalyst, of course, I say Gino or Kirkland have got their eyes on that one. Bardoc's got a lot of refractory gold, so they'll have to deal with that. And then if we move down into the next group, we'll leave the overseas ones out and we'll just focus on Australia. We see some there in Navarre, in Victoria, must be under the eyes of them, and Staveley must be under the eyes of Kirkland's and Gina. Emerson in the Northern Territory, and some of the others, you just heard Breaker, they must also be in the frame, Horizon, Calidus, and maybe De Grey. One I like that's really moved very well is, and I'm not sure how you pronounce it, Taito in Côte d'Ivoire. They're really discovered a lot of new gold, and talked to them at their booth because they've really done very well over the years. So they have to be in the frame. Maybe the bigger companies will also get interested in the next lot down, the $25 to $50 million. There's a whole lot there that they could be looking at in the market space. If we look at the medium explorers, they're then divided into three ranges. These are between 10 and 50 million. Just have a look at that sub $15 million one, the red one. Hasn't moved up. It didn't have that kick when the gold price went up that the other ones had. So obviously not a lot of interest in the market when, say, a company has a market cap of less than $15 million. But these are companies that were down under $25 million over a year ago, and they've all migrated up into that space. So we can see that even among those smaller companies, those that have got a market cap now, or had one 12 months ago, sorry, of under 15 million, have been able to grow over the last 12 months and move on up. So among those small cases, companies, you've got to look for the gems. You've got to look at, one of the things I'm going to show you in a minute, how much they're spending on exploration, but also the geology of where they're exploring and what their potential is. And there's some companies there's 6 of them that were under $10 million 12 months ago, and now they're up in the medium to larger group. So, troll through some of those smaller companies, and there may well be opportunities there. If we look at how the companies under $10 million have moved, we do see that gold share price there, perhaps in the 5 to 10. But gee, anything under $5 million market cap has just gone down, down, down. They're shells. They need a new direction. So if you see a company out there that's got a market cap of less than 5 million, tell them to go get a new project. But this is what's important among explorers, is what they're actually spending on exploration. If you have a company that's spending 1, 2 million or more, they're more likely to respond to a gold price rise and to the market rise than those that are spending less. If we look at the companies, what they've spent in the range in exploration over the last 12 months, and look at what the percentage they've raised during the same period that they've spent on exploration. So if we take what they've raised and what they've expended, we see that the companies that have spent more than $2 million on exploration have spent 91% of what they raised in that same period in exploration. And we go down to the smaller companies, the last lot that have hardly spent anything on exploration, wow, 15%. So they're companies obviously to stay away from if you really are interested in getting a kick from the gold price. They might be good for shells. But one of the opportunities for investors, of course, with the smaller companies is the share price typically moves in several phases of opportunity. If you're lucky enough and you're an insider, you may get to hear of a new project, but that's pretty rare. But mostly the opportunity for investors is at the drilling stage, if some company can make a discovery. So if you can look at those companies that are down 15, 25, 50 million and are drilling and spending money on exploration, got good geology, good results coming through, then there is opportunities there for investors to come through. In the daily, we help you by dividing all the announcements into groups depending on what the status of the project that we're reporting on. And so drilling results are there in a separate group by themselves, new drilling results every day. Drilling in progress, that's one to have a look at. That's drilling coming up. There may well be opportunities in there for investment. And as the projects move up through the phases, there's also periods during the appraisal and feasibility studies, if that's all looking like the project's economic for investment. And then in the production construction phase, it's pretty tough. Permitting time's a long time these days, and you have to really wait then to look at any money coming out of the project until it's reached nameplate and is making some good profits. One of the things we do each week, each Monday in the daily, is to have a look at what's the ratio for the week before of rises to falls. And we see that the ratio move above 1, so that's where we have more rises to falls, just as we get a kick up in the change of share price. So we've seen that over the last year, if we look at all the resource companies, we've seen there's been 2 opportunities for the share price to go up, those little red bars, and you'll just see just before that period we've gone from a period of negative or below 1, so there's been more falls than rises, and all of a sudden we've gone up to more rises than falls. What that is, that's the smart money getting in. I don't mind following the smart money into the market. So that's basically it. We're fully independent professional summaries, key technical outcomes of every ASX resource project, technical summaries of every investor presentation. So every investor presentation by a company today, provided they've released it to the market, will be in tomorrow morning's edition of the ASX, of the Austex Opportunities or Daily Report. It'll be read in New York, in Zurich, in London, and all over the world, as well as here. And you get my comments, 50 years of experience there. It's a subscription-based, individual and company rates. And basically, fund managers and other service industries find new opportunities over a cup of coffee every morning. And I see Kerry there. She's got a lot of important announcements, so thanks very much.